Good morning and welcome to the Next Gen Planners Big Breakfast Conference Special.
My name is Dan Graham.
I'm Francois de Toy, and we are here every day during conference week, bringing you insights from amazing people in financial planning.
So as always on this show, we want to say a big thank you to everyone for joining us on this week's series of special shows regarding the Global Financial Planning Conference. Throughout the show today and throughout the week, we want to hear from you guys on your perspectives on our big topics of this week. And today's big breakfast, big topic is 21st century investing.
Yeah, I'm excited for this one. On the show today, we have three awesome guests. We always have awesome guests, right, Dan? First up, we've got Sophie Austen from one of our sponsors, Sparrows Capital, Louisiana Salge from EQ Investors. She has an important message about climate change. And we have a special guest who is a co-founder of a female investing app, Margot de Brogile from your Juno.
Shall we get into the shows, Francois?
Let's get into the show.
So our first guest today is Sophie Austen from Sparrows Capital. Where is she? There she is. Hi, Sophie. How are you doing?
Fine, thank you, guys. How are you?
I'm good. We're all good. So as Francois just mentioned there, you guys, for the second year in a row, you are sponsoring our conference this year. So literally, thank you so much for that. We could not do it without you. We couldn't put on this massive show without the support that you guys give us. So we really, really appreciate that. Just a quick one, though. What is it about the conference this year that made you guys want to choose to sponsor us?
Well, I think we've done the virtual conferences twice now with you guys. And so we definitely weren't going to miss the opportunity to come and meet your community face to face. And also, it's been important for us with NextGen. You've kind of been with us from the beginning. We launched our advisor proposition score in February 2020, and you guys have been a great support for us since then. And I think the alignment of philosophies between NextGen and Sparrows Capital, trying to bring about positive change in the industry and just trying to deliver better outcomes really fits well. So it's definitely something we want to be a part of and will continue to be a part of, I hope.
So Sophie, our big topic today specifically is 21st century investing. And one of the big things for advisors to think about with their clients is offering them fair value. Now, the investment market is very concentrated. It's a very concentrated space. How would you define value for investors?
Well, I think the idea of value is kind of a very interesting concept, because what one person can consider to be fair value can be very different to what someone else's idea is. So we see quite often that value is linked closely to price, but it's really a lot more than that. There are a lot of other factors at play when you need to assess the value of something. So in reality, it's kind of that equation of quality plus service divided by cost. And so as an advisor, you should really be looking at that message of, first of all, it might be cheap, but is it good? Because just because it's cheap doesn't mean that it's delivering good value. But as we all know, from an investor's perspective, the most important thing is long-term net returns that matter to get clients to where they want to be. And so that really brings to the forefront the importance of avoiding overpaying for something that's under-delivering.
Yeah,
sorry about the dog.
That's okay. Is that Monty in the background giving it a bark this morning?
It is.
Yeah.
I think it's the postman. It's normally the postman.
I thought you were just jealous because you're on the show and he's not. I think that's what it is, isn't it?
Got something to say about value, I think.
Yeah, I'm sure he does. So one of the notes from, this is going to be relevant to the South African audience, really, but UK audience. Our regulator here in the UK is called the FCA. And they're working on something at the moment called the consumer duty. And one of the notes from that, one of the big kind of takeaways from that is regarding value and getting far away from those traditional types of, shall we say, high cost, low quality, low value investments of the past. There's loads of them out there. We all can think of them. But how are you seeing asset managers, like you mentioned already, advisors, but also like DFMs and platforms. How are you seeing those respond to this kind of proactive change in regulation from the FCA?
Well, I think it's important that we all look at this. This is not the first time that, cost or charges has come under pressure. We saw it with RDR, we saw it with MiFID II. And so there has been a lot of assessment within the industry with platforms, advisors, DFMs. We have seen downward pressure on costs over the last few years. And now that's filtering through to the asset managers as well. I mean, we all know that there's been a movement towards passive investing over the recent years, and flows into index funds and ETFs. And I think that is largely because people are becoming more aware of the cost of active management and possibly the underperformance due to the additional costs. But financial services is an innovative and resilient industry. It always has been. And I think that we'll see developments in, product innovation and charging structures. And I think that will all come through in the wash.
Yeah. And as we've already mentioned, well, Francois mentioned at the start, today's big topic is 21st century investing. And I mentioned this the other day. I thought, on the face of it, it doesn't sound very interesting. But actually, when you look at it and you think about what's going to happen in this century, and what's already happened in the past 22 years, it is a really, really exciting space. But what do you think? What trends are you seeing that lead you to think what will dominate the 21st century of investing?
Well, I think we're all aware of that passing of generational wealth that's happening at the moment. And it's passing down to a generation that is far more concerned with driving positive change, whether that's climate change, gender equality. There's lots and lots of themes that are out there. And also it's a generation that has all of this at its fingertips. So I think that we'll see a lot more passion about investing and wanting to do good, and also wanting to see a lot more data back from investment managers so that they can question their outcomes.
Awesome. Sophie, thank you so much. That wraps up our time together this morning. Really appreciate that you've been here and for coming on the show.
No problem. Thank you for having me.
Awesome. Next up, we have a monologue with Louisiana, and let's take it away.
I am Louisiana Salge, Senior Sustainability Specialist at EQ Investors. We are a discretionary fund manager specializing in sustainable and impact investing. Given our theme today is 21st century investing, how could I not speak about arguably the biggest challenge humanity is facing right now, climate change? Today, I will aim to tell you why you, as a financial advisor or planner, need to start thinking about climate change in your role. But let's start with the basics. We are already seeing the impacts of the human-caused climate crisis as global temperatures climb ever closer to that 1.5 degree mark, the point where natural systems begin to collapse, triggering permanent changes and transforming life as we know it. This is, of course, mainly due to the burning of fossil fuels for various types of energy. While we've benefited significantly from this as a society so far, it's also apparent that this dependency needs to stop now. Scientists around the world agree that if we do not curb our rising emissions, we'll experience the devastation of natural ecosystems, increased frequency of extreme weather, flooding of coastal regions and related impacts on our food supplies, resource poverty, and ultimately wars and migrations over the remaining scarce lands and materials. That sounds pretty dire, and it is. These effects become worse as our warming accelerates. So ask yourself, what kind of Earth will future generations inherit? To prevent the most devastating effects, scientists and governments have agreed to target no more than 1.5 degrees of average warming since pre-industrial levels as the goal. To be able to get there, though, we need to reduce global carbon emissions by half by 2030, meeting a state of net zero by 2050 latest. Net zero means that we have no new emissions added to the atmosphere, with any remaining emissions captured and stored. So how are we doing in respect to this 1.5 degree target? Well, not good at all. In fact, we are already at about 1.1 degree of warming, and what we call our carbon budget is rapidly running out, probably in the next 9 years, unless we change something significant. The bottom line is we need to act decisively across the world to fundamentally change the way that the world is organized, decarbonize all sectors, and use every available lever to get there. You may now be asking, well, how does that all affect my role as a financial advisor or planner? Well, to summarize, climate change effects and our action to prevent the most devastating effects will challenge some of the assumptions inherent in how you do your job. Cash flow modeling, for example, and giving advice. Ignoring climate change means your advice may not hold in the long term and may not meet the objectives of your clients. So let's explore a few of the assumptions that could impact your cash flow models, for example. First comes inflation. Climate change itself will put pressure on raw materials, and our acting on the crisis will too. Higher demand for low carbon technologies, quicker spending to meet our targets, skilled individual shortages, etc. This creates significant inflationary or green inflationary pressures. Next is the assumptions about a somewhat stable global growth and expected returns from investments given a risk profile. Well, climate change is likely to dramatically shift risks and opportunities across the world, including making big pockets of the economy lose competitiveness and permanent value through stranded fossil fuel assets or high polluting business models. Mainstream investing following market benchmarks does not appear to be pricing in these risks or opportunities correctly and may not be in your client's long-term beneficial interests. Next, clients' property values may also be assessed against physical impacts of climate change, like that of flooding. And your cash flow modeling may need to integrate rising insurance costs depending on their location. And then lastly, if we surpass our climate targets significantly, there will be a shock to all systems, and the physical risks to your client's health may fully undermine life planning as we know it now. Passing wealth onto the next generation, while of course often the key aim, will be a challenge if there's no world to pass it into. Now that I've given you a few examples of why professionally you should think about climate change, let's touch on your clients too. A recent National Statistics Office survey found that in the UK, 75% of adults worry about climate change and 35% are regularly anxious. In that context then, it's really highly likely that when exploring sustainability preferences of your clients, climate change will feature. More clients understand that their money has power and want to use it in the right way and protect it from the big sustainability risks like this. The SCA is also now encouraging you to actively seek out and cater for these preferences. And there's more. You have a key role here to play to help ease your client's anxiety and improve relationships. So I think I've spooked you a bit by now, but I want to end on a positive note. These shifting dynamics also open up new exciting opportunities. First of all, finance can make an impact on the world. Active, ambitious engagement can create real change in the businesses polluting our planet, and rightly directed capital can help scale up climate solutions that we need. Through these methods, your clients are having a real impact on limiting climate change. And secondly, while avoiding risks to capital and your cash flow modeling assumptions is of course super important, there are financial opportunities too. Investing in low carbon and climate solution companies will allow clients to benefit from big performance tailwinds. And these come from for example, from regulation, consumer pressure, and the massive amounts of expected capital needed to meet our net zero commitments in place. The new global leading companies really will be green tech. And the good news is that even if you are, this is the first time you're thinking about climate change in the context of your financial advice job and your role, there are many things you can do now. I'll leave you with 2 action points from this today. Number 1, look at the investment solutions on your CIP or panel. There may be a need for a more specialist DFM that has the expertise to future-proof your clients' investments through a climate lens and allow clients to put their money to work for the future of our planet. Don't shy away of having more than one sustainable proposition on offer. Client sustainability preferences really don't fit into one box, just like their risk appetite. Number 2, extend your fact find and suitability conversations to what motivates your clients and their worries about the future. All these subjects can lead naturally to a conversation about how your client wishes to use their money without leading them in any specific direction. For those 75% worried about climate change, you can provide further education on sustainable investment options and draw on the impact reporting provided by sustainable DFMs to bring their money's impact to life and provide transparency that they want. So, to conclude, thank you so much for listening. And I hope that when you think about 21st century investing now, the climate crisis has gained a more prominent spot. Please get in touch with us at EQ Investors if you wish to learn more about how we help financial advisors and planners with our range of sustainable investment services. Thank you.
Well, how good was that? So I should say a big thank you to Louisiana and the team at EQ, because they are also sponsoring our conference this year. They are one of our wonderful sponsors, and we could not do the conference without them, just like every other one of our sponsors that we've got this year. Like I said, if you want to find out more information about EQ, you can head to eqinvestors.co.uk. Right then, what's up next?
I see I'm struggling this morning. What an inspirational talk from Louisiana. Now it's time for our big breakfast, big topic. And today, as you've heard a few times now, we are talking about 21st century investing. And joining us to kick us off on this segment, we have Margot de Brogile from your Juno. And how are you doing, Margot, this morning?
Good morning. It's great to be here. Thank you for having me.
Awesome to have you.
So thank you very much for joining us this morning, Margot. This isn't the first time that we've spoken, and you've also been on our podcast as well, and it was lovely to have you on there. So we really appreciate your time. You're very, very busy over at your Juno, so 10 minutes of your time is absolute gold dust. So as Francois just mentioned, that we've been talking about the whole show. Today's exciting topic is 21st century investing. And one of the things we really could not miss, and we couldn't not talk about, is the impact of female investing and the rise of female investing in the 21st century. To start us off, what are the figures looking like for that rise in female investing?
Yeah, absolutely. So I think what we've seen in the pandemic overall is that the retail investing landscape has definitely changed. And we've seen that as well, just with the amount of female investors who have joined the ranks as investors. Sorry, I live next to an airport, so you might be able to hear the plane passing. So a lot of platforms have actually reported that during the pandemic, females were the biggest demographic signing up as new investors to their platforms. We saw that Nutmeg, Plum reported some of those figures. So that is obviously super encouraging, but I think something that I do like to still point out is that there is still a huge gender investment gap, unfortunately. In the UK, as it stands at the moment, men hold about 30 billion of investment, whereas women hold just 14.3 billion. So less than half. So we still have a long way to go when it comes to equalizing that.
Yeah, and one of the things that you guys are doing with your Juno is educating women on investing and money, Margot. So how do you think financial planners can help in this space?
Yeah, absolutely. So I think the gap that we're trying to fill is that at the moment, financial education is something that we simply don't have access to. It's something that isn't taught to us at school. And if you're lucky, your parents might know a little bit about money. But if you're unlucky, you'll learn through trial and error and probably make some costly mistakes. And that really disadvantages women because there is unfortunately still a legacy of traditional gender roles in the way women get spoken to about money. And what we see is that as a result, women don't tend to see themselves as investors. But the narrative that we're kind of fed in the story of like the Sex and the City is, women are excessive spenders and you need to rein in your spending and budget. And it's not this idea of growing your wealth. So I think financial planners have really a big role to play in bridging that gap as well. And what I would say is the first step is becoming aware of just how big that gap still is today, both in financial confidence, so understanding where is your client's starting point, how do they feel, and what is kind of their conditioning, what do they believe about the world of investing? Do they think it's the Wolf of Wall Street, and do they think it's something that is completely inaccessible to them? And how can you provide the information to bridge that gap? I think the other thing to realize is that up until now, the fintech industry and the financial industry as a whole is an industry that has been mainly built by men for men. And there's a big disconnect by the types of products, by the way we get spoken to about our priorities. I think there was a study that 9 in 10 asset managers say that their products target men as a top priority. So I think as a financial planner, really realize that this is still a problem to this day, and see if you can, just take time to listen to your client's priorities if they're a woman and help bridge that gap.
Yeah, absolutely. And I've got a bit of feedback. I'm not sure where that's come from. So one of the things you mentioned in there was financial education, and this is something we're always talking about in Next Gen, and it's really important. I love talking about it because it's lacking at the moment. Like you mentioned there, most people don't learn about money till trial and error. You don't learn about a mortgage until you get one. You don't learn about a pension until you get put into one by your workplace. And you're like, why am I saving all this money when I won't get to access it for another 40 years? But of course, it goes deeper than that, and we need to educate people. But when it comes to women specifically, what impact do you think that like higher financial education levels in women could have on society in general?
Yeah, I mean, what we see as well is that women have different behaviors when they start investing. So different types of priorities, they tend to invest more for the longer term. They tend to outperform men because they have a different kind of appetite to risk. But also what we see is that social impact and ethical investing tends to be much more important in the list of priorities for a woman. And so I really believe that a world where women have more money means also a world where, women are able to cast a vote with their money. And the previous speaker was just speaking about climate change. I think that wealth transfer and empowering women to really make those decisions with their money is also really going to support transitioning us into a world that is more sustainable and more supportive for all of us.
Margot, I want to ask you this question. So if somebody would ask me this question, they would probably go like, what have you seen over the last 20 years? I'm excited to ask you about what are you excited about and seeing what's going to happen in the next 20 years?
Yeah, I mean, I think there's so many, exciting financial innovations at the moment, the crypto space, the blockchain space, Web3. I think we're really going to see a future of financial products. And what I'm excited to see, and maybe very optimistic still, is hopefully we can build this next wave of financial innovation, making it more equal. I think there's a real opportunity in creating a different financial landscape, but that means making sure that women, but also anyone else that hasn't been included in the financial industry up until now, is really considered from the early stages in building those foundations and those building blocks. So hopefully a world where, Web3 is designed considering women as well is one that I feel excited about.
Awesome. And I'm going to go off script a little bit. I just want to ask you this question as we bring Sophie Austen on as well. You're welcome to bring her on, Dan. I just want to ask you, do you think that technology is making this, helping women in this space, does it enable that and make it easier than it was before? Does it play an important role?
Completely. I mean, technology, I think it depends who is building the technology, because up until now, again, the fintech industry has been mainly built by men. So hopefully if we can have more, female startup founders and more female fintech staff, then I think we can really build products that also support women on that journey. So yes, I think technology has a huge role to play.
Love it. Sophie, what are you excited to see in the next 20 years? as far as financial planning and investing, I think particularly is concerned.
Yeah, so I think it's exciting to see kind of increased engagement and more accessibility. And I think that's not just across end clients, it's also around continuing to attract talent into the industry. So I think we need to continue with kind of bridging that advice gap, whether it's to do with gender or wealth. You know, we need to let people know that there's support out there through financial planners for people who maybe don't think they can afford advice, or that they don't have enough money that's worth investing. We need to do more about that. And we also need to do more with young adults. So like you said, financial education, we need to make them more aware of the careers that are available to them within financial services, because I don't think they quite understand like the numerous avenues you can go down within the industry. It doesn't have to be a financial planner, it could be compliance, or like Margot said, you could work in fintech and IT. And I think it's exciting to look at the ways we can kind of drive engagement and accessibility.
Awesome. So I've been around for a very long time, but I can say that I learned a lot from everybody this morning. So thank you very much. Really appreciate it, both Sophie and Margot, for coming on. You were awesome guests. And thank you to Louisiana for her brilliant monologue. Really appreciate it.
So that's it for today's show. I just want to echo what Francois said. I've learned so much this morning. This show certainly did not let me down this morning. I was very excited about this, and it certainly paid off. Thank you so much, Sophie, and Monty, of course. There he is. And to Louisiana, who's not here. Hi, Monty. And of course, Margot, it's always lovely chatting with you. And of course, to Francois for being my fantastic, glamorous assistant all the way from South Africa. So that is not it for today. Of course, if you are a conference ticket holder, day 2 set off in 3 minutes time. So that's 8 a.m. UK time, 9 a.m. South Africa time, and that is on the global conference stream on the Mega Conference website. And then we will be back at 4:30 p.m. this afternoon. We'll be covering the topic of 21st century investing, and on this afternoon show we'll be looking at something else, which is cryptocurrency, on that show as well. So please do join us for that. It'll be a really, really good show. But that's all for now. Thank you very much to our guests. Thank you guys for watching as always, and we'll see you this afternoon. Bye bye.